Hi, everyone. Today is Monday, February the 24th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. I am looking at the weekly charts right now because I do want us to step back for a minute and realize that since November, we've been sitting in a little bit of a sideways patch. So what we want to do is see what the week gives us, and it's pretty important to note the prior week and to look at the 50% range of that particular candlestick. You can see from a weekly perspective, our buying volume is decreasing. Now, last week's volume was very light on the downward side, and the CME showed that we had positive open interest at the close of the markets on Friday, which led me to believe, hey, we're going to have dip buyers when we open up on Sunday. So how do you want to see that? We can talk about that a little bit. I'll show it to you at some other juncture. I just want to get through this weekly thing. But you can go to the CME and look up futures and open interest on the close. It'll tell you how they've positioned into the close of the day. So this bounce is no surprise. What I do find to be very interesting is this breakaway candlestick, November the 4th, had a 50% retrace. Notice we dipped below and recovered, dipped below and recovered, dipped below and recovered, closed below, gap down, and then recovered. And so this is the top of that candlestick. It's the line in the sand for me as I see this week unfolding. If we can stay in the range between 60.17 and 60.22, we could have ourselves a week that reverses and recaptures this candlestick. Remember, when you've got flat momentum, even if trend is fantastic, see the longer trend, candlesticks will retrace each other because there's something going on. When momentum is flat, it tells us that there is a slushing of price action to and fro around the midpoint. And that midpoint to me looks like it's anywhere between 61.10 and 61.20. All right. This week, we've got to get past 60.97. If we don't, we've got more bearish action ahead. That's my thought, right? So what are the traders going to try to do this morning? Well, every single one of these savage dips that we've had, where we moved up and retraced an entire week of motion on the way back down, almost, we have reflexive buying. So, remember, traders, we are simpletons. We're going to look for the easiest way to find money and get out. And so that's what we're staring down right now. Easy way to find money and get out. What is that going to be? They're going to buy the dip, try to force it into 6,100. If it doesn't go, they're going to get out of the game. Okay, so where might our lines be? Well, we got a gamma line at 60.68-ish, right? Huge line. That's where we're battling now. Can't seem to get over it. If we get over it, we should push for about 30 points, provided we hold the edge, right? And you know what those formations look like. You get to a very tight time frame, 3 minute, 5 minute, fails to close lower, breaks resistance, pulls back, and gives you a higher low. Okay? And if you do it on tighter time frames and you're making sure that you've got your risk managed on the bottom, you'll be able to take yourself a really nice position through the day. Excuse me. Yes, I would like not to be a petri dish, but here we are. Okay. Taking a look at the NQ, same sort of thing. What have we got going on? Old resistance. This is back from July. We had a breakout, same November 4 candle, right? Same November 4 candle. Looking at the high of that candlestick, 21,265 looks to me like where this one is potentially headed, but we've got NVIDIA on the horizon. It's coming. I cannot remember the day. Is it today or tomorrow? Somebody put a ridiculous article out that said the chart was going to move by 20% into the earnings. That is wishful thinking for me. 226. So that's in a couple of days after the market. It's going to move the market. But here's what I'm seeing. 2 up, move down. Let's look at the 50% of last week's motion. You can see we're grinding up. You can see the dip buying is here. What's very key is whether the traders can hold above 21,803. That's going to be a key line in the sand. There is a gamma level at 21,750, but there are gamma levels every 50 points in here. It is so clustered that, you just have to follow whatever the trend is saying. The gamma lines are just jammed up together. I don't normally see them like that, and I think it's probably because of hedging. Not for positive, but we'll see. Where don't we want to lose today? We don't want to lose the gamma line at 21,650. Now, remember, what I mean by that is, can it come down and test it? Absolutely. Absolutely can come down and test it. It's got to bounce or immediately begin to consolidate. If not, it's going to move down into this area. All of them have come down into this 21,265 area, this candlestick from November, right? The midpoint of the day, 21,960. There's another gamma line nearby there. Super important. The 50% range, of course, of the candlestick is going to be critical for price action to hold, and that is right there around our 21,960. Traders have been rewarded for buying the dip, and they're trying it today. They're not really punching forward like I like to see, but they certainly are giving it the old college try, as it were. All right. Key lines, 21,800. Got to get up over there. It's got 150 points to the north. Likely, if it heads up over there. If we reject that 21,800, we consolidate there and lose the level, we're going to head to 21,650, and then it'll be another sloshing event. But I honestly suspect that we are going to have ourselves just a nice, easy rotation into these lower levels. We are seeing a ton of exit liquidity. What does that mean? It means when price action moves really high, big contracts come out in the ladder or the depth of market, and they are exiting. And so that's what we're seeing. Take a look at the YM. Now here's the mad cross current. Emerging markets, dumpster fire, in my mind, okay? As long as the dollar stays bid, and it's been running off, it's been fading since the beginning of February, right? But as long as it stays up above this 104, emerging markets are going to have a devil of a time, and that means they're going to punch their way back into something like the YM, the E-Mini Dow. All right, so what are we looking at? It's still upward trend. Momentum is not as strong, but they all did the same thing. They said, hey, listen, we positioned bullish to go long at the close off of a deep down day, and they're buying it up. So what is the line in the sand? Listen, we don't need to lose 43,500 unless we immediately recapture it. If it loses 43,500, step back and watch for it to properly recover with structure. That is, fails to hold lower, bounces into and above resistance, pulls back and holds a higher low. Doesn't matter if you're looking at a 5-minute or a 1-month chart, the formation is always the same. Always the same. So lean into what's always the same. Or I'm going to use the word always in quotations. You know that crazy things happen in markets. But if something is turning around, it has to do this. It has to make some sort of structural shift. So if we lose 43,518, the next congestion zone, 42,500. You might say, hey, why can't we look at 43,000? You would have a point. 43,000 is a fair estimate. This January 13 candle is still inside of this November 4 candle. Notice, essentially, 80% of the price action has been in this one candlestick. So what does it have to do to show further upside or further break? It's got to break out, pull back, and hold a higher low. As I see it, it's not doing that. It breaks out, sells. So we are in a broad range, literally all the way down to 42,000. Bitcoin. So, between the Argentinian fiasco and now, I just saw that somebody stole a wallet, a Bitcoin wallet that was, what was that? It was $1.5 billion got stolen from an exchange. This is the Wild West, and it's absolutely full of thieves. What people are going to, when things are largely unregulated, people are going to break rules all the time. If we want to stay inside of a space that sits cleanly outside of that noise, we can trade the futures market. What are we building? Looks to me like a diamond pattern, right? We talked about this last week. So what gives? Well, these kinds of patterns are pretty, they're fairly unique, right? The range is the length of the apex, right? Usually, so that's from 110 to 89. So what is that? 20,000, right? Which brings me down to my 75,000, which I've been looking for. So what do we see? Upward moving averages, downward momentum. We're going to see bounces on the dips, and then we have to see if we can get back up over 100,000. If not, we're headed lower, and I think 75 is where we're going. 75 to 74. That's my thought. It's been my thought forever. You know what it is. I say bounces or sell zones here. Inside candle formation beginning the week. Volume profile people would say inside range, inside value. But clearly, that's the 50% marker of the prior week, and we just jammed ourselves into it, and we're rejecting it. So that's 96,600. If we get above that, we could go for, 4,000 points to the north. If we lose the level, it's likely to move down, but because we have a cross current, it is going to be jagged. Look at how we are retracing candlesticks. Okay. Oil. I'm like, where am I? Okay. Let's take a look at oil. A lot of stuff happening over the weekend, and this weekly chart is pretty important. There's some really good macro guys under there in the landscape, but I have to tell you, if we try to predict the future based on the landscape that is macro, we got to have a timeline that's like 30 years long. Okay? So we can't really do that, but let's take a look at oil. We know $70, pretty important. This is the line in the sand, 70.20. Look at the selling tails in this chart over the last several weeks. 1, 2, 3, 4, 5 weeks of selling and then selling tails. What does the selling tail tell us? It tells us that buyers really tried to move up and they couldn't. What is slope? Down for momentum, right? What is trend? Down to flat. VWAP, very negative, very heavy congestion here. What does that mean? Well, it means the following. Bounces, still likely to be sell zones. I like looking for short action at that 7150-ish zone. Right, we're pretty far away from it. Let's draw the Fibonacci off of last week's candlestick and see what the 50% range is. Yep, 7150, 7160. I like that to say, hey, that's a short. Now that's $1 away, right? That's $1,000 of profit moving up into that space if it holds. Notice selling volume lower. So we built up the buying volume had the same amount of selling volume, so we gave it all back, wash, rinse, repeat, and now we're coming back down into here. What would be fantastic is if we bounced into that 7160, took the short as soon as it confirmed, and then it came down and gave us our 68. That would be fantastic. Is it going to happen? No clue. But this is what we're looking at. So oil needs to sit in this patch, or the sector that invests in oil is not going to want to invest in oil. So we have to be super careful that we hold that ledge as it needs to be. Here we go with gold. And I know these are a little longer because these are weekly candlestick formations. Have a gander at this. Holy moly. I have not looked at a weekly chart for gold, and that is fairly remarkable, right? Look at how many weeks green. 1, 2, 3, 4, 5, 6, 7, 8, 9. This is the 10th green week, but it's also the 3rd week of not being able to break higher. So, what do we want to look for? I don't know. It looks like there's going to be a dip that buys, right? But it's got to be a dip. So, take a look at the prior weeks. This is an inside candlestick, so I'm going to measure this candlestick because this one is inside. Halfway marker, 29, 25-ish. We need to hold that area for it to be a buy zone. Remember, how does an area hold a position? It comes in, finds support, bounces off, finds support, bounces off, finds support, bounces off, and then it breaks away and then comes back in and gives us a higher low. That's the structure we need to look for if we are staring down the opportunity around 29.24. Looks great to me. Yeah. Otherwise, if we lose that zone, we're just going to stair step 28.87, 28.46, 27.91 breakout zone. It needs to take a breath, but man, oh man, is it on the run. That chart is absolutely scorching to the north. Okay, here's the SPY. 599. Well, we know 600 is really important, right? It's really, really important. This is how we ended the week. We can't see the pre-market action yet, but is this looking like a potential outside candlestick? Maybe. January 13th and November the 4th, still giving us range. Take a look. They're going to try and bounce it off this 599 level. It's the high of this breakaway candle on November the 4th. So they're going to try and choke around that zone. 600 easily come into the zone. We're going to watch them bounce off the area. This is a region where, let me take a look at on one of my other candlestick formations here. See what they're printing. Up at 603. So let's do a halfway of last week's candle and see what we get. All right, let's do this to this. 606 is the halfway measure. We're currently dancing around 603. If we cannot get up over the open of the candlestick of 2 weeks ago, yeah, what is that low? 604. If we cannot get above the open at 604, this chart in SPY is just going to chop around and then ultimately begin another range formation for us. Okay, so that's how SPY is looking. If we do lose the close of Friday, we should have a waterfall into 592. Very interesting price formations. Very, very. It's going to be an exciting week. It really is. Okay. Qs. Finally. I feel like I've been talking for 3 years. Okay. So here we are. Topping formation. Pardon me, folks. just a little bit under the weather. Let's see where they are. 533 is that line in the sand for the Qs. Let's see where they're sitting. 528, right? So where is 528? 528 is nowhere really. So that's in the middle of a big noisy patch. Looks to me like the line in the sand here is that 526 area, because we did test it in the overnight market. So we got near there. If the Qs lose 526, it's got to immediately recover or begin to consolidate, else it's going back down. Okay? Candlesticks easily retracing each other, and it is a buy the dip formation because our trend is up. Remember, trend always master and commander. Okay, everybody, that's it for me. I'll see you at the Moneyball midday report. They'll be clanking around here, getting some work done in the house, and hopefully it won't be too bad. All right, take care, everyone. I'll see you on the streams.